Okay, what do we do about Trump? He's here 2.0, slightly more contained, I think you would call him. Lots of policy changes going on at the moment. Things like border control, immigration, things like this aren't really going to disturb the stock market. Energy policies, one, drill baby drill. Probably not good for the oil price, probably not good for the energy sector. He's getting rid of a whole load of regulation which allows the US to fill up their strategic petroleum reserve, get independence from particularly the Middle East on oil supplies, and that can't be good for the oil price. So the energy sector probably drifts into the background a little bit. AI, he's announced a $500 billion investment in cooperation with some other companies to build AI infrastructure. That tells you, whatever the details of that, that tells you Trump is AI positive. Good for big tech stocks, good for sentiment towards big tech stocks, good for all the picks and shovels companies like Nvidia and all the other semiconductor companies and companies that are used to build AI infrastructure. So Trump, tick, big tech. Crypto, not one of our things, but clearly he has declared himself the king of crypto, or the crypto president, or whatever expression he used. Very pro-crypto, the Melania coin, the Trump coin, making billions of dollars for him. Pro-crypto. And that's about the only thing you can say about crypto. If people like it, the price goes up. What else have we got? Things that have gone. World Health Organization, climate friendliness, climate change friendliness, got rid of the Paris Agreement. Wind generation goes to the background if they're going to drill baby drill. Electric vehicle subsidies, work from home, gender diversity. This is the opposite of woke, is Trump. And what else have we got? Mars, going to Mars, fabulous. But the main driver for the stock market is tariffs. Tariffs are rumored to be coming in on Europe, a universal tariff, first of all, on everything that gets imported to the US. Trump's rumored to be adding 10 to 20% tariff to everything. That would be inflationary, pushes prices up. A 60% tariff on China, a 10 to 20% tariff on everything coming in from Europe, and a 25% penal tariff on Canada and Mexico because of what they're doing with the border until they fix it up. This was worst case scenario and what we were expecting pre-election. If the tariffs come in lower than expected, then bond yields are expected to drop because it's not as inflationary as we thought, which allows interest rates to come off a bit quicker than expected. And that's good for the equity market. So what we are seeing on day two, we are at the moment, day two of Trump is talk about a 10% tariff on China, talk about penal tariffs on Canada and Mexico, and no mention as yet of a universal tariff. So if tariffs are less than expected, the market's going to like it, bond yield's going to come off, interest rates going to relax, the FOMC will think about cutting rates, and the markets will go up. And that's what we're seeing at the moment. Trump has heralded the extension of the miraculous bull market of 2024 is extending into 2025. We know Trump loves the stock market. He will soon, no doubt, be claiming credit for record highs on the S&P 500 and the NASDAQ. And to some extent, it is his fault, at least the last few percent anyway. So let's see what he does with tariffs. It could all fall in a heap. The great thing about Trump is we've got 4 years of amusement and something to write about every day. Let's see what he does in the next few weeks.